Nick, where are you seeing the greatest opportunities at the moment?
Well, we touched on banks initially as being obviously significant beneficiaries of rising interest rates and bond yields. But another area we like is non-life insurance. So you think of companies like, Direct Line or Chubb and Arch in the US. And they're historically very counter-cyclical, very defensive. Their earnings aren't driven by economic cycle, but by claims, accidents, and so forth. And since the pandemic, they've pretty much lagged equity markets because of that defensive nature, as people have either played growth at one end of the barbell, or maybe reopening and cyclical stocks at the other. So we started to see a bit better relative performance coming from them, and we've been adding to them and think they're actually have an interesting, attractive outlook over the next 2, 3, 4 years.
Right, and Charlotte, you mentioned inflation-linked bonds. Is that where you're seeing the greatest opportunities at the moment?
Yeah, we have slightly increased our duration recently in our index links, and I mentioned the price that is factored in, the rate of inflation that these securities are currently pricing is pretty low, given the uncertainty and the risk of an overshoot. So if you look at the US Treasury inflation protected security market, that is currently for the 10-year duration, sort of Xing out the next 5 years, the following 5 years, as reflected in the forwards, basically saying that the Fed or the inflation rate is going to be around the Fed's target, a little bit below, actually, it's 2%. So there's no premium there for inflation uncertainty, and there's certainly no expectation of a sustained overshoot. And we think particularly that part of index-linked bonds is pretty attractively valued.